Hello, everybody. It's Danny Dealz here. Thank you for tuning in to Un Poco Mas, the show where we give you just a little bit more. The show is produced today by executive producer extraordinaire Hurricane Lopez. I would like to talk to you today about the SoFi stock, ticker symbol SOFI. Lots of exciting news. We just wrapped up yet another quarter of banking excellence. Just wanted to make a couple of comments. SoFi made another acquisition. This time it was all cash. Um, and Wyndham Capital has joined SoFi Mortgage. Let me pull up the Wyndham website. You can see this has already been integrated into SoFi. So SoFi.com, home loans slash mortgage. And this is where Wyndham Capital's web address points now. So um, this was an all cash transaction. They said it should not have a material effect on the 2023 numbers. Um, it's a good and a bad time to, buy a mortgage company, increase your mortgage loan presence. Obviously, mortgage originations and mortgage loans and just home sales activity are is very very low right now. So um, theoretically, I would say that Wyndham Capital may have been struggling a bit in terms of their business, their growth, and their trajectory, and it was just maybe a good time to acquire them while things were very, very slow. Probably would have been more expensive if the housing market was very hot still and interest rates were very low and you had record amounts of mortgages and a lot more transactions going. So this might have been a time SoFi could go ahead and get in, purchase Wyndham, and just you know make their mortgage loan business much much better, so that when housing picks up again, interest rates go back down, and you see transaction volume going up, SoFi becomes a power player in the fintech mortgage space. Now, apparently Wyndham was the leader in terms of the technology for an all digital mortgage company. They had extremely high satisfaction rates with over 100,000 clients obtaining mortgage loans through them. I'm still going to do some more research into Wyndham and how much this transaction cost and how we can, expect it to affect SoFi's bottom line. I think that's going to be very, very difficult to project over the short term. It's not going to have much effect over the short term, but over the long term, a lot's going to depend on what happens to interest rates and what happens to the housing market and what happens to the amount of mortgages that companies are doing overall. And then when that picks back up, I expect SoFi to take a much bigger piece of that mortgage business based upon this transaction. So, again, I think SoFi thinks very long term and is very circumspect with the companies that they go ahead and acquire. It's not just a quick grab to get revenue or something for the short term. That is simply not how Noto operates. It's always a long term vision. That is either going into that Amazon Web Services of fintech, where SoFi wants to be the backbone and the provider of services to fintechs and banks for their banking stack, and also SoFi, this also makes sense in terms of their product wheel they're trying to sell their customers. Because think about it, a mortgage is by far the biggest loan or the biggest financial product you're ever going to take out. And companies that originate mortgages, each one is a huge ticket item. So if they can bring customers in with their high rate checking account, their credit cards, their personal loans, their student loan refis, then the theory being these young customers with high credit scores and great jobs, once they decide to buy a home, they're going to stay within that SoFi ecosystem. So I think it could be an extremely smart move for SoFi. Their management is a hell of a lot smarter than DannyDealz. So we're going to trust them for now on this one, and we'll have to watch and see how this affects the bottom line. Um, SoFi, they're estimating their earnings are going to be on May 9th. I don't think they've announced the exact date, but it's usually sometime toward the beginning of that next month. Um, so, what is going on with SoFi? we see one, two, three, four, five, six earnings per share beats in a row. The estimate is for -8 cents earnings per share in Q1 2023. And I don't know. I think SoFi is definitely going to beat that number again. I just don't see anything slowing down their trajectory from how they've been knocking it out of the park every single quarter. I think they are going to continue to grow products, memberships. They're going to get closer to profitability. I think there is an outside chance they could dial back some of the stock based compensation and a couple of other items and just tweak the numbers and go ahead and run a net profit this quarter. Or in Q1, excuse me. If not Q1, I think there's really a great chance they could run a net profit in Q2. I know people have been saying Q3, but SoFi always likes to under promise and over deliver, and I love that as a SoFi investor. Now, if you look at the last couple earnings, the last couple runs, SoFi tends to peak out right around this $7.50, level. Last three decent sized moves. You can see here we're going to 755. Here we're peaking out about the 770 level, and here about 750 again. So what do I predict is going to happen if we get another beat, another very solid number? If it's just a beat, 1 or 2 cents, like SoFi usually sets up, I could see us, coming back to that 750 range. Um, if the market hasn't really picked up and the economy isn't really moving a little bit faster again, I think they will probably peter out there at about 750 or a little bit less, and then start to fade back down sideways again. If this is an absolute home run, say a beat by 5 cents, 6 cents, where they're very, very close to net profit, and it becomes completely apparent that they will make a net profit in Q2, I think the stock could really make a move to the upside. And when I say a move to the upside, I'm talking about, taking a look at this 14 level again, which, you know, has been obviously support when they were doing the pump and dumps earlier on after the SPAC thing, and all the SPAC stocks were just going completely crazy during the COVID pandemic, and people had a lot of extra cash to invest. Obviously, from there, came all the way down. Initially, found support about $6. $6 again, found support here, became resistance here, and then again, came down as far as 550 here recently, found a little bit more support, and we jumped back up to around the $6 level. Let's take a look at what SoFi did today. It's April 4th, 2023. It is after market, about 1:17 p.m. out here in Los Angeles. That's about 4:17, not about, it's exactly 4:17 p.m. out in NYC. Hope it was a great day, great night. Hope you're doing well wherever you find yourself in this wonderful world that we all share. So today, SoFi closed at $5.89, down 14 cents. Volume was moderate at almost 19 million shares. That's about half of the average, but that's a little bit deceptive. That's kind of more of an average day, because those averages are thrown off by those huge, like 100 million share days that the stocks tend to have. But so yeah, so let's take a look at this 30-day just to take a look at some volumes here. So 18, we did 32 and 41 and 25. So volume really picked up the last couple days and then decelerated today. The market was a little bit soft today in terms of the NASDAQ, the Dow, the S&P were all down about half a percentage point. The Russell was down almost 2%. If we take a look at, you know, the trend with SoFi, it's like the earnings are a beat, the stock rallies, and then the stock just gets shorted back down and bleeds back down as people tend to lose interest in the stock. But I think once the company is actually making a net profit, it's going to draw in a lot of institutional investors because the growth has been there and has been consistent. I think the question mark is, can they actually rein in the expenses, the customer acquisition cost, the stock-based compensation, and make a net profit. I've always said all they really need to do is scale. And that's going to take care of itself because their margins are good, and the customer acquisition cost, as people get on, the product wheel, is going to come down. Their cost savings is going to be there from the Technisys deal, the Galileo deal, and now this Wyndham deal seems really good. They apparently have great technology, great people, and this is going to integrate very nicely into SoFi's core business. So SoFi, though down 2% on the day, I think is setting up very favorably again for another earnings beat. And will the stock run up a bit and then get beaten back down? Or will we actually break through that sort of mid sevens or wherever we ran to last earnings? Yeah, we topped out like 772 or something like that. So I think to really make any type of breakout, we have to get very, very close to a net profit or hit a net profit. If we hit a net profit, I think we're going to break out well past that $8 mark. That the stock has been held under for so long, low these many months. SoFi making moves, not one to stand still, not one to be afraid of a bad economy or high interest rates. CEO Anthony Noto, again, bold, brave, confident, continuously executing. I think SoFi is undervalued. I maintain my earlier price target on the stock, and I think SoFi has at least $3 or $4 of upside if they can turn in a net profit or lose just 1 or 2 cents per share. Thank you for watching Un Poco Mas. My name is Danny Dealz for Hurricane Lopez. I hope you guys have a great afternoon. Hope you make some money trading. Hopefully it's a great day. I don't know why I'm saying hopefully so much, but thanks for tuning in. Bye-bye.